I'm going to talk about real-time alerts, what they are, how to use them, and how to use them in conjunction with the other Hedgeye products. Like I alluded to in my previous two videos, the system really works to its highest potential when it's all used together. Okay, so a real-time alert is an alert sent out by the Hedgeye team, whether it's one of the, well, directed by Keith, but whether it's based on macro or whether it's based on one of the names that they like within either ETF Pro or Invest in Ideas. Okay, so single stock names will come from Invest in Ideas. ETF might be from ETF Pro or part of the macro team based on the macro positioning, whatever we're in. But it's often said that the trades are rubbish because they're only in it for small gains or losses. And there's part of a reason for that, and the reason that it's not often spoken about is Hedgeye is a large company and it has certain oversight on it that it has to uphold to. So Keith can only make a real-time alert, can only signal it. He can only signal a single name if he has an analyst as part of that, doing an analyst work on that company. The other part is that it's part of his PA, so he can't buy a stock, then signal it to us to then go and buy it, which means we'll all pile into it, especially if there's not a lot of if it's something small, because then he's front running us. So there's a signaling perspective to it. Okay, he can only send them at the point that he enters it. He enters his own trade, so that there's no front running of the Hedgeye subscribers. Okay. The other part that people have to remember, and this is why everything all fits together, people sometimes just want to pick real-time alerts. They're like, oh yeah, I just want the signaling part, I don't want the rest of it. But you have to remember something like GLD is, I've gone back, where are we now? So we're September now, okay? For these trades, I didn't want to show the most recent trades because their names. I'm always conscious of how much I'm sharing, and because it's a paid subscription, and not everyone, I can't verify if people watching this video are subscribers or not. So just bear in mind that we're back in September now, okay? So during this period, gold was a long, and it was obviously signaled a buy, okay? So the trade didn't actually go that well, but people think, oh, he bought LQD and we only got a 0.4% gain. I'm just trying to think back to September. Okay, part of the quad, whatever quad we were in that period, LQD was a long. So a core position would have been established, okay? Perhaps LQD was also in the ETF Pro product, so a core position would have already been there. All this really is a signal to say LQD is at the bottom of the range. And if anything, Keith always says you have to, in your decision process, you go biggest at the edges of the ranges, okay? Now, I'm based in the UK, so I don't have the options that you guys or some may have in the US, or access to the options that you guys have in the US, okay? But if you listen on the macro show when he's signaling, if LQD is at the bottom of the range, at some point it would have been at the top of the range. And being a fixed income position, maybe it was 10%, and he's lightened up to the position. I don't know. Maybe he's down. It was at the top of the range, and he's only gone from 10% to 5%. And now he's signaling it's at the bottom of the range, and I'm buying it. Okay. As we discussed in the risk range product, maybe he was adding as it was going down, as we discussed, from this center line. Okay, so let's pretend LQD got to the top of the range. It was at 10%, so he lightened up the position. It's down to the center line, so maybe he started adding 50 basis points, whatever, 25 basis points. And then when he sent the signal, Just bear in mind, this is an oil chart, but so when he sent the LQD buy, it was at the bottom of the range, and that was his signal to say LQD is now a buy. It's at the point where you'll get the biggest bang per buck. It's at the edge of the range. Okay. The other part that he often talks about in the macro show is for the options traders. That is where the options are likely to be the most mispriced. And he has to signal, he has compliance. His compliance team is watching him for how he is making the trade and what he is signaling to his subscribers, okay? So if anything, you already have, if you've got the whole Hedgeye subscription, you would have already had a core position in LQD, okay? So if it now moves up from the bottom of the range, your core position is going higher. All this is it's a signal to say, if you're at a half size position, increase your position of the core holding that you already have. Okay. And this, these little small gains, just for instance, this one, I mean, LQD doesn't move that much, but, he's only in the trade for 1% or something like that. Well, basically what he's saying is at the edges of the ranges, options are more likely to be mispriced. So if he's bought an option, a buy up or whatever, a call option or sold a put or whatever you do on LQD, what he's really signaling is he maxed up his position at the bottom end of the range. The trade was right. The price bounced off the low end of the range. And he's now, if it was an option, he's closing it. He has to signal that he's doing that. And as is often said, he's not saying, that move, that 0.4% move was all you're going to get and now you need to sell LQD. No, LQD is a core position in whatever quad it was in. So you would have already had the position. The only decision to make was to, 1, make your position larger at the edge of the range, and 2, if you got into the trade and if you put something fancy like options or anything like that, is to close it, because now the price would have moved back closer to this central point where the trade now becomes 1-to-1 directionally. You have just as much chance of upside as downside. Okay. The other point is, I can't show you now, but the one thing that many people get wrong is they think that real-time alerts is a portfolio. I know, because I done it when I first became a subscriber. I thought I could pick and choose what I want. I don't want to pay for all of that, so I'm just going to get ETF Pro and real-time alerts. He always says, constantly, real-time alerts is not a portfolio, okay? The quads, and you've seen the big chart of what's the highest probable outcomes in those quads, that is the portfolio. The decision process is whether something is working or not working within that quad, okay? And, Keith always says about cutting losers early. Just because something is on the quad map to say this is good in quad 2 or this is a short in quad 3, it doesn't mean it's going to work. So, you have to watch the price and you cut it if it's not working. So the other side is what comes up in the open signals shouldn't be your entire portfolio. And the other thing is, just like I explained in LQD, you already had a core position, whatever the position size was at this point. This is just a signal to say it's at the bottom of the range. So when this signal comes out, you don't automatically stick 5-6% straight away into a position, because you would have already had, a 3-4% position already, and this was a signal to say the highest probable outcome is for the price to bounce off of this lower range. So you're trading around a core position, and the real-time alerts is that it's an alert that something is at the bottom or the top of a range. Or at the other side of it is, I'll show it in a later video. Once I can show you this, I don't want to show you the most up-to-date one. Again, I don't want to share something that's, you know, a paid product that I'm not in control of. So there will be another video specifically on real-time alerts and how to use, you know, what's open and what's closed, and how to read into it, not just the names, but, you know, what is it telling you, whether it's net long, net short, and things like that. So that is coming. I just wanted to build a little bit on the risk ranges. You know, there was a period on Friday morning, you know, so I'm based in the UK, so I'm looking at these, you know, long before many guys in the US are up and doing things. So there was no real-time alert, there was no signal, but, you know, the price got to the bottom of the range. This is on oil. The price got to the bottom of the range. I opened a trade, closed the trade within an hour, you know, without any signals being sent. And that's the strength of this. It's your decision whether you want to, how big you want the position size to be or not. And it was the same on copper. You know, there's a huge bounce off the bottom end of the risk range. Quick trade, in, out within 2 or 3 hours, and done. You know, I got out far too early. You know, I could have rode it for more. Back, smack bang, just here, straight to the center. You know, but the current sort of thinking is that what many thought was coming last Friday, you know, a market sell-off based on last Friday, might actually come this week when nobody's expecting it. So there's a certain amount of, you know, market sentiment in that everyone was expecting it last week, so the likelihood of it happening was less. So we'll see. But it's just to say, you know, these risk ranges, they work, and it's up to you to make a decision. You don't have to wait for obviously the US market wasn't open, so there was no signal going to come anyway, because this was 11-12 a.m, so that would have been 6 a.m. for New York. Okay, so there would have been no real-time alert for that anyway, and not directly on copper. It would have been on the copper ETF or on Freeport McMoran or something like that, a proxy for the copper price. But anyway, I just wanted to show you, because it was within a day of the last video coming out. Two things, oil and copper, both hit the bottom end of the range and then shot up straight to this center line, and that's why I like to use it. This is where the trade becomes, you know, a one-to-one up, one-to-one down, kind of just no man's land, you know, kind of position for the price. So I hope that helps. It's strange, like I've said a couple of times now, I'm probably boring everyone. It's hard to share data that's not mine, or, well, I've paid for it, but I don't want to be sharing the most recent data for stuff that obviously people are selling. The open signals, I've taken a screenshot, and in a few days when those trades have played out, or, you know, whatever, I've taken screenshots of what it was and how I read it. So I will explain the sentiment, and, you know, whether the sentiment to be taken from the open signals within real-time alerts, you know, whether they worked or not. So that will be in a few days once everything's played out. So yeah, hopefully you found it helpful. I'm trying to just sort of explain how I use things and how I take it. By far, I'm not perfect, and probably people are pulling their hair out saying, no, that's a load of rubbish. But just comment, you know, what was useful, what wasn't, just so that I know what to change for the next video. So yeah, cheers. Thanks for listening.